Tuesday, April 21st, 2020, MONERO 64, home of alternative economics and contrarian views. This morning, I want to talk about how crude oil proved that only gold can be money. And before I start, I'd like to say I did an interview yesterday with an old high school friend of mine, very good friend. We went to high school together in Brazil, in Rio, American high school. He's originally Cuban. His family fled Cuba after Castro took over. And he's based out of Miami. And he's been an oil industry advisor for 35 years. And we did a great interview yesterday. I hadn't spoken to him, well, since 1982 when we graduated. But we had been following each other and corresponding through Facebook, of course. And he watches my videos, and he explains exactly why the price of May crude oil dropped to minus 40. So people were paying buyers to take their crude oil. Yeah, watch the interview. I did it last night, London time. I'll put it up in the cards and below in the description. So before I go into the main theme of this video, which is why only gold can be money and not oil, I'm going to look at the markets this morning, see where we are. It's 8:20 a.m. London. Yesterday, of course, was not a good day for the stock market. The Dow dropped almost 600 points, 2.4%. S&P outperformed a little bit, dropped about 1.8. So let's see where we are. Start out with gold, of course. Right now we're at 16.94, down just over $1. The high's been 17.0190 overnight, and the low's been 16.85. So it was quite interesting to watch gold and silver yesterday, even though they didn't really go up dramatically compared to everything else. They look like a very safe place to be, of course. Silver right now is down 5 cents at 15.25. The Dow futures is continuing to go lower. It's down about 200 points or 0.8% at 23,445, 23,445. I'll show you this chart of the Dow before I go further. I posted this yesterday on Twitter, this chart. And at the time, we were within this rising wedge, but it looked like we could break below it. What's a rising wedge? Well, it's a consolidation pattern in a trend. The trend, of course, has been lower since February. We've had a stock market crash, of course, and the rising wedge is a consolidation in a continuation pattern. Usually, it doesn't always happen, of course. Technical analysis is not an exact science, but it's about probability. What happens now with the rising wedge? As you can see there, we've broken below the trend line there. In the rising wedge, of course, once you break that trend line, normally we should continue lower, which is the previous trend, of course, which was down. It's a consolidation. Inversely, a falling wedge is the other way around. It's a rising market that corrects with a falling wedge, and then later on it resumes the upward trend. So that's the technical picture for the Dow futures or the stock market. Not looking very good. S&P futures is down about 20 points or 0.7% at 2,801. NASDAQ 100 futures down 0.5% at 8,685. Currencies, sterling is down about 0.2% at 124.15. The euro is at 108.40. It's down about 0.2 as well. Currencies have been fairly steady of late, the fiat currencies that is. The dollar is down 0.33% against the yen at 107.30. Crude oil, while the June contract is actually testing $20 here, we're at $20.67. It's still up 1%. What about the May crude? My friend Tony Planos, that's his name. You'll see if you watch the video. He said he expected the front month May contract, the price, to stabilize and go back up after yesterday. And he's right, because right now, even though I have a delayed quote here, the price is at minus $4. It has gone back above zero. The high has been $2.54. If you want to understand why this happened, yeah, watch the interview, as I said. Okay, well, let's finish off with the bond market in terms of the prices. Right now, the 10-year yield is down. It's testing the 60 basis point level. It's down about 2 basis points. The 30-year yield is down to 1.2. I think last week the high was about 1.4. So again, not good signals for the economy. Falling bond yields are not a good indicator for economic growth. So there you go. That's the markets. Now to my theme of the video of why oil proved yesterday that only gold can be money, and that it proves that also, in my opinion, the petrodollar is on its last legs. So yeah, the price of May crude went to negative, minus $40 or thereabouts. That's where it was. And it's quite amazing. You're paying someone to take your oil. It's a little bit like the negative interest rates, right? We're in really interesting times. And I think generally we've got the central bankers and the Keynesians, the people who think they can manage markets, to blame for all of this madness. But in all of this madness, we saw like gold and silver yesterday stay very firm, not do anything. Do you ever think the price of gold would go negative? No, of course it wouldn't. And why? Well, because gold is not consumed, and that's the key. Gold is not consumed. Crude oil is consumed. So, and that's why gold is money. Money cannot be consumed. It has to have no or very little industrial or consumption use. It's money because people perceive it to be money. It has an attraction to people. It's durable. It's malleable, it's divisible, it's a store of value, and that's what gold is. So the petrodollar, just for the fact that crude oil is consumed, is not money, nor is any other commodity out there. Silver, of course, is a bit of a hybrid because you can consume it industrially, but it is also money. Gold cannot be consumed, so that means that the stock of gold that's ever been mined forever in history is always present, and that's why it's money. So what happened to crude yesterday is that there's a glut of oil out there, and it cannot be consumed, and people cannot find a place to store it, so they're trying to get rid of it, and they'll even pay people to take their crude off their hands. So that would never happen to gold. And that's why, in my opinion, yesterday was a very important day, at least for me. I'm sure the mainstream media is not talking about this. They think it was just something that happened because of the crisis. But I think it's much more significant than that. It just proves that gold is the ultimate money, the ultimate store of value. And the proof yesterday was that crude oil isn't, because it is a commodity that is consumed. And one of the qualities of money is that it isn't consumed. And that's why the price of gold will never go below zero like crude oil did yesterday. So I will end with a question here that I actually asked on Twitter yesterday. Can a commodity whose price can trade below zero in a crisis be suitable to be the foundation of a global reserve currency? And I don't think so. And that's what oil proved yesterday. And that's why gold is so important, and it will continue to be important. What about the price of gold in dollars and other currencies? It will continue to go higher, only because gold cannot be created willy-nilly out of thin air like these national currencies. So I would hold on to my precious metals, physical precious metals. And there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to the channel if you haven't yet. And you can also follow me on Twitter, Facebook, BitChute, Steemit, and DTube. I wish you all a great day. Take care. Bye.